BETR stock closed out Friday's trade on an upbeat note, climbing 5.2% or $3.01 to finish the session at $60.20 per share. After a week of intense volatility, this move adds another chapter to a stock that has surged, corrected, and is now attempting to stabilize. Even with all the ups and downs, BETR remains up roughly 60% since Eric Jackson first went public with his bullish call. BETR is Better Home & Finance, the parent of Better.com. It is a digitally native home ownership platform offering mortgage, insurance, and real estate services in all 50 states and in the United Kingdom. Its Tinman AI underwriting system and Betsy AI loan assistant are designed to streamline and automate the mortgage process, reducing paperwork, speeding up approvals, and cutting costs. It is an attempt to disrupt one of the largest, most heavily regulated, and least digitized industries left in the United States economy. Eric Jackson dubbed it the Shopify of mortgages, a phrase that has become shorthand for a vision of a platform that can handle the entire home ownership journey at scale, much as Shopify handles the commerce journey for online merchants. Over the past few weeks, BETR's stock has been on a wild ride. After Jackson's endorsement, the shares moved sharply higher, hitting intraday highs in the 90s before pulling back into the 50s. Along the way, there were significant insider developments, including filings showing that Pine Brook, one of the company's major early investors, sold its entire stake during last Monday's surge. Jackson tweeted about this on Sunday, saying that the main reason BETR stock didn't go higher last week was because Pine Brook was using the pop to sell its holdings and that the overhang was now gone, clearing the way for the stock to move higher. Large block sales from a big shareholder can act like a ceiling on a stock's price. Every time new buyers step in, that seller is there providing supply, which soaks up demand and prevents momentum from really taking off. Once the seller is finished, the supply and demand balance shifts. The same level of buying pressure can now push the price higher because there is no longer a wall of stock coming onto the market. Removing an overhang is often bullish even if nothing else has changed about the company. Friday's bounce may be the first sign of the market responding to that new reality. Pine Brook's reasons for selling could be as simple as taking profits after a massive run. They could also reflect a view on valuation or changes in their portfolio strategy. But from a technical perspective, the effect of removing that seller is clear. There are fewer big blocks on the offer side and potentially a clearer runway for new buyers. That, combined with the ongoing narrative, can be enough to produce a rebound like the one seen on Friday. The macro backdrop adds another layer. In August, new single-family home sales jumped more than 20% to an annualized rate of around 800,000 units. That is a strong beat relative to expectations and suggests that the housing market might be finding its footing after a prolonged slowdown. Lower mortgage rates and builder incentives are playing a role, and with the Federal Reserve signaling potential cuts, the cost of borrowing could fall further. For a company like BETR, which makes its money by originating mortgages and related services, more housing activity means more potential business. This is the essence of Jackson's thesis. BETR is a technology company in a huge, cyclical industry that may be turning up. If the macro winds shift in its favor at the same time as it scales its AI-driven platform, the company could see dramatic growth in loan volume at lower marginal cost. This is the heart of the Shopify of mortgages analogy, a platform that can handle far more transactions at a fraction of the traditional cost, transforming unit economics and potentially capturing significant market share. Beyond mortgages, BETR is expanding into insurance and real estate services. The idea is to build an ecosystem where customers can get everything they need in one place, capturing more revenue per customer and making the relationship stickier. If it works, this multi-service approach could further enhance margins and growth. But the execution risk is real. This is a heavily regulated industry with complex compliance requirements. Scaling fast while keeping regulators satisfied is challenging. As of now, the company is still losing tens of millions of dollars per quarter. Management's goal of reaching adjusted EBITDA break-even by 2026 is ambitious but unproven. One thing working in BETR's favor is the work it has already done to clean up its balance sheet. By retiring more than $500 million in convertible debt owed to SoftBank, the company generated over $200 million in positive pre-tax equity value and removed a major financial overhang. This move strengthens the company's position and gives it more flexibility to pursue growth. With that liability off the books and with the potential for macro tailwinds, BETR is better positioned to scale its platform if the opportunity arises. Friday's bounce is a sign that the stock may be stabilizing after its initial surge and pullback. A close above $60 suggests buyers are still interested and may be stepping in on dips. Without Pine Brook selling into strength, the stock has an opportunity to build a base and move higher on its own. New institutional investors stepping in and insiders buying shares on the open market would be signals that the next leg up is sustainable. Looking to the week ahead, there are several catalysts to watch. Housing starts, existing home sales, building permits, and mortgage application numbers will all provide clues about the state of the housing market. If the positive trend continues, it reinforces the bullish narrative for BETR. Interest rates and any signals from the Federal Reserve or movements in bond yields can impact mortgage rates and, by extension, BETR's addressable market. New SEC filings, insider trades, or updates from management could provide fresh information about loan volumes, margins, or the path to profitability. Price action itself will also be telling, whether the stock holds above support in the 50s, retests the highs from last week, and whether volume confirms the move. The week ahead is an opportunity to see if Friday's bounce was just a blip or the start of a new leg higher. The removal of a major seller, a cleaner balance sheet, and positive housing data make this a story with real potential. Execution and macro conditions still matter, and volatility is likely to remain high. The key elements are that BETR closed Friday at $60.20 per share, up 5.2% on the day. This bounce comes after a week of dramatic moves and leaves the stock still up about 60% since Eric Jackson's public endorsement. Insider filings show that Pine Brook sold its entire stake during last Monday's pop, removing a potential overhang. Positive housing data from August suggests a supportive macro backdrop for mortgage origination. With a cleaner balance sheet and a bold AI-driven platform, BETR remains a high-potential, high-volatility story at a critical juncture. The week ahead will test whether the stock can build on Friday's bounce, attract new buyers, and move closer to Jackson's bold vision.